What's up, everybody? So we are about to get into market structure. Market structure. Okay, so just to get this out of the way, guys, this is my third video. This is my third video. I'm not saying based on uploading. I'm based on saying like recording. I made two mistakes. Instead of me saving, I clicked the bin box by mistake. I deleted it by mistake. I was supposed to click what's this thing called? Stop recording button, but I clicked the deleting button by mistake. So yeah, and it is really it is 12 and basically it is 12 it is 50 minutes past 12, which is yeah, 10 to 1. But it's cool, it's cool. Yeah. So yeah, market structure. Market structure, there are different, well, there are three different conditions on market structure. Unless if there's more that I don't know, but most definitely I know three types of market conditions on market structure. Market structure, guys, is one of the most important skills that you need to acquire before you can tell yourself that you need to trade and before you can get into trading, right? So for you to be able to know what is happening right over here, that you what like right what you see in front of your eyes, you need to learn market structure and the market conditions, right? So we are going to get into the market conditions, which is also and the same thing. Okay, look at this, look at it as market structure is the daily time frame, right? So in the daily time frame, obviously you have lower hours, like you have well, let's take it as a 1 hour time frame. In the 1 hour time frame, what makes a 1 hour 1 hour? Minutes, right? Minutes. What is minutes? Trending markets. And in minutes, what do you have? You have seconds, right? Seconds are ranging markets, and in ranging markets, I mean, in seconds, what do you have? You have milliseconds, right? In milliseconds, what do you have? You have choppy markets. Look at it like that. That's the way that I can put it. That is easy, right? 1 hour, it is what? 1 hour, it is as a whole, uh, market structure, and in it there is different types of level, right? So let's get into it. Right, what you see in front of you is trending market, also called as an uptrend. This is what helps retail traders to catch trades without, I don't know how institution traders trade, but I think they do it fundamentally, if I'm not mistaken. Trending markets allow retail traders to have opportunities in the market. Without trending markets, the losses in the market or the certain percentage of how many trade traders make it in this industry would be higher. I mean lower, my bad, would be lower. It'd be very, I know what just happened. Okay, it's cool. It's okay. You just do this. Didn't mean to do that, but it's okay. Uh, Let me do this. Oh, no. I'm just gonna mark up these things a little bit. Please bear with me, guys. Bear with me. Okay, let's get into it. So, this is the uptrend. The uptrend consists of higher highs, higher lows. This is a very important thing to keep, right? So, guys, pay attention. This is really, really the source. I don't lie to you guys. I don't have any passion for trading. I mean, no, not for trading. My bad. For teaching, I don't have any passion for trade for teaching, but definitely, I am going to, give some free what do you call this? Some free knowledge. I ain't gonna lie. I am gonna give some free knowledge. I don't care. Nope. I didn't mean to do that. I meant to do you. Oh my gosh. Okay. That's, that works too. So, an uptrend consists of high highs and high lows, high highs and high lows. And basically, we are bullish. What you see right here is a bullish trend, and in a bullish trend, we have high lows, and in high lows is when the market retraces below or it pauses to give you an opportunity for you to enter the market. And when you enter right here, when you're going to buy at this level, you see what happens? The market goes up, and it with that when it goes up, meaning that the money that you have also put on the line, it also goes up. Understand? But if you sold at this level, meaning that, and then you are saying you basically saying that the market is going down, but the market is going up. It doesn't mean that your money is going up. Your money is going down. Understand? So in an uptrend we buy, and in a downtrend we sell. Right? So in a point of view looking at this market right over here in this market that is called what do we wait what the heck am I doing? Okay, and this one it is called the ranging markets. My bad. I'm a little bit tired, I'm gonna lie, guys. This is the wait what's I changed it down. Oh, not that the network is a little bit slow. This is the ranging market. In a ranging market, price is just basically going sideways, consolidating. It's hitting your resistance and your support, resistance, support, resistance, support. Is not breaking out of this box. And keep in mind that the way you are going to trade your ranging market and your uptrend is very different. Your trading market and your ranging markets, the way you're going to trade them is very different. You are not going to use the same strategy or the very same method or the same mindset. We have to change. You are going into this market differently, the same way as you're going to go into this one differently. So you, my, what I can say is stick to the trending markets, because the trending markets are most likely going to give you more opportunities than the ranging markets. Even though the ranging markets are very attractive, I'm not gonna lie to you, they are. But and here you're just putting yourself in a very tight position, because even when it's a ranging market, the market tends to be very, very slow. It's not volatile as the trending market. So next we are looking at the choppy market. right? Choppy market is one of the markets that we are definitely going to stay away from because wait, what's happening? Oh yeah, choppy markets is the market that we are going to stay away from it because the choppy markets they all of a sudden they give you uptrend, all of a sudden they give you um downtrend. You can basically let's say you have sold. No, let's say you have bought right over there. You bought, and when it's about time for price to hit your TP, you see what it reverses. It goes against you because choppy market are like some like how can how can I put it? Choppy market is basically like haters, right? They just hating for nothing. They don't know what they hating for. They just gonna all of a sudden they're just charging against you. Then all of a sudden they just say no. All of a sudden they come against you. All of a sudden they just say no. You understand? So you need to stay away from choppy markets. Choppy markets are not worth it. Are not worth your money unless if you just have money to play with. Then okay, cool. Take it down with you. And next, what we're looking at is, man, I'm just so tired. We have a downtrend. Downtrend is vice versa to uptrend. It is basically you having lower lows and lower highs. Wait, what the heck? And there's isn't it that's a long? Like what the heck is going on? And this network is messing up with my head. Okay, so a downtrend is vice versa to the uptrend. The same thing, but you just apply the same thing, just that vice versa, because right here is still what a retracement. It's a pause whereby it gives you a selling opportunity. When you get at this point, when the market pauses for you, when it gives you a signal, let's say maybe a candlestick signal, when maybe you might see engulfing bar, or you might see a doji, you just enter, or it as a whole when it makes when it comes back to this level, as you can see, it's matching with the background uh resistance, right? When prices breaks, I'm just gonna get into that very muchly soon, where I'm explaining the support, the resistance, the law of polarity in the market, whereby when price breaks below the previous let's say for example, let's say where we are right here, right? This is a low, but price broke below the previous lower low and it's making a lower high, right? So this part at before this price broke below it, it was a support. But as soon as price broke below the previous lower low, it makes this part a lower low, but it makes this part a what? A resistance. It's no longer a support, it is now a resistance because price has broke below law of polarity. Understand? Um Yeah, so this is how much I can put it, and I have very muchly good ideas on how I can put out more content. So basically, I'm going to give you guys more on my strategy, my top-down analysis. I'm going to get back into going into the strategy, or when probably running into problems, maybe if two time frames align but the primary time frame doesn't align, what do you do, or what do you consider that, or what's happening? And also, we are going to back test it to show you that this thing actually works, guys. It is. I'm not lying. I'm not here to gain anything. I'm just here to put out free knowledge. All that you can do is just share with your friends or share to whoever that wants to trade. But and if you actually want to trade, meaning that you have listened to it this far, you have listened to the videos, or you have gotten to this point. Understand? So top down analysis, man. This is a very, very, it is one of the most easiest trading strategies, because the way it is so easy, you can some way somehow find yourself no longer knowing what you're doing, because that's how so simple it is. And some people call it analysis paralysis, I think, if I have it correctly. And once that hits, it is so confusing, because you tell yourself that, okay, I know what I'm doing, I knew what I'm doing, but what's happening? Understand? It's because the strategy that this one that I'm talking about, it is so easy. It can sometimes mess up with your head that how are you so easy? But at the same time, you are just, you know, giving me all this confusion all of a sudden. But man, thank you guys for watching this, and I hope you guys are going to apply what I'm going to be giving you on this channel. Subscribe and just give me your feedback on what you think, or not basically what you think, or if what I have put out for you guys, it actually works, or you do understand it, or if you feel like you want me to explain something different or in a different type of way. Wherever you start with this top down analysis, or anything in the market that you feel like you stuck with, hit me up in the comments, and I can try my best to explain it and to just break it down for you guys. So have a good one. Cheers. Oh, I almost deleted that one too.